Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, Friday the 13th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic, geopolitical, and then how that affects market with market analysis. Well, I do that same kind of stuff here in these daily market commentaries, but I layer on option strategies that we can implement in and around those assumptions we come up with from digging into the economic data and the geopolitical atmosphere. All right, so let's get on with the economic data. But remember, please remember, past performance of any trading system or methodology is not necessarily indicative of future results. Now, got that out of the way. All right, across the pond, we got German CPI coming in at negative 0.6%. It was right in line with expectations. Here in the United States, we got our own consumer price index, CPI, coming in at 0.1%, expected to be at 0.2%. Core CPI, consumer price index, which is going to strip out food and energy, things that are a little bit more volatile like that, came in at 0.2%. So in line with expectations at 0.2%. So obviously the food and energy are coming back. Well, we've seen that with crude oil. We can see this right now. Energy coming off quite dramatically. That's causing those prices to come down a little bit. So that's affecting the regular CPI. All right, we got natural gas storages, which came in at a drawdown of 115 billion cubic feet, expected to be 106 billion cubic feet. So that is good for energy stocks, or at least buoyancy. We saw that major build yesterday, and it did not affect crude oil at all. We also have a bond auction going on later on today, and Williams speaking, who is an FOMC member. But today we can see it's getting a little toppy here. We're in the 50 handle. We rallied quite hard yesterday off of a major build in crude oil that we saw. What was that? It was a 7.5 million barrel build, expected to be like a 3 million barrel build, and market really just popped. Now, I've talked about this, below 50, in those 40s, I don't think it's really sustainable. It causes the frackers to slow down on production, and OPEC will probably look to make some cuts as that starts to happen to try to diminish supply, which, you know, hopefully, even if demand is constant for them anyway, would drive prices higher. I like the prices low in crude oil because it makes it cheaper at the pump. That increases velocity of money. We can spend those extra $10, $15 elsewhere when we fill up our tank. So, and then that money gets into the economy and starts creating velocity. But today we're seeing it look like it's a little bit toppy. It did come down and test that 9-day simple moving average, bounced up and away. But, you know, if you just look at the chart here, it does not look like it can get that momentum back up into the value area at this point anyway. We've got big gasoline reserves and stuff like that really starting to build. So all of those things are a negative to the price action in crude oil. All right, we've got gold starting to move a little bit higher. You know, China basically came out, something I forgot to mention during the economic, and we're talking now geopolitical, or it's more economic, I suppose. But the coronavirus, they've kind of changed the way that they're looking at coronavirus in China, and 15,000 newer cases or people that are now in the statistical atmosphere for coronavirus showed up with this new study there, and that's caused a little bit of weakness here in the United States in the markets. That's given, well, in the equity markets, I should say. The rest of the markets where it's a flight to safety are starting to push higher, that being gold and bonds. You can see bonds are up 7 points, well off the highs, though, of the day. But in and around, right where I've been talking about, I think the sweet spot is going to be just right around that 160 handle, maybe up to 163, 64. But at the end of the day, I think we're going to see a lot of volume build up in this little trough area, which is what I'm talking about, you know, 163 being on the high end, but for the most part between 160 and 163 to build in some volume there. All right, the VIX is in positive territory, but again, well off the highs. That's because we are near the highs of the day, despite the fact that we're seeing the Dow Jones down about 78 points. You can see when those new cases started showing up, the market really sold off on the open, but have since recovered. Here in the NASDAQ, we are near the highs of the day again, not quite making a new high, but this, again, we're starting to get this, struggle up here at these levels, and it really starts to feel a little bit heavy to me when we start getting, we got a doji that looks like it's a top. It didn't get confirmed. It actually got broken. We engulfed that, which is more bearish, but then we got another one setting up. Even if we made new all-time highs, settled on the highs of the day, despite, without it going up to like 9,800 or something crazy, but, somewhere, even if it settled somewhere around 9650-ish, that would still, to me, make it look like another topping pattern. And when you start getting those set up, it just feels a little bit heavy. So keep that in mind. I'm not going to play anything to the downside unless we start seeing something confirmed. But here again, we have the E-mini S&Ps having that same type of chart set up. Yes, we did slam down on the coronavirus, but have recovered. Now it starts to look a little bit weak. Let's take a look at the E-mini S&P on the 30-minute chart. You can see those overnight highs were created right after the close, as soon as the market reopened. Very bearish on that coronavirus, but coming into today, people are shrugging that off, and you can see we're looking to go up and maybe print those all-time highs intraday. So market feeling strong right now throughout the day, early morning here as people are putting money to work. But, when we start looking at those chart patterns, it feels like it's a little bit heavier than what we're seeing right here in the daily chart, or in the 30-minute chart. All right, I don't know why I have eBay up, but I am considering covering this. It's back up into the 37 handle. And, I played this for a trade on earnings a while back. And at this point, I'm kind of getting tired of having this in my portfolio. So I've lowered my cost basis on it quite a bit. I've actually covered half of the trade from that for a profit. And it's just getting a little boring, to be quite honest. So I'm going to be looking to maybe cover this relatively soon. I just wanted to say that. And then let's see, do I have the Microsoft trade here? Microsoft, I usually, I talked about this a couple of times here, that I'm looking to add Microsoft long deltas to my portfolio. I was waiting for a bit of a pullback. We kind of got that yesterday, last couple of days. And yesterday, you can see the chart set up like, all right, it looks like the market still is bullish in here. So today I'm doing a webinar on a short put spread. It is for a market neutral bullish type of setup. And if I get clipped on it, then I'm more than happy to take it into my portfolio. Well, but if it falls out of bed and all of a sudden something happens, like the market wants to go down and cover the gap or something along those lines, then, I have my protection on. If something bad happens with Microsoft, which I don't expect. I mean, they came out and knocked it out of the park with their earnings and forward guidance. So I'm happy with putting something like this into my portfolio. So with that being said, I went into the March shorter duration and sold the 180 puts in there, and then bought the 175 puts, and I collected a total of $1.60 for that trade. So if the market stays above 180, actually if it stays above 178.40, then I am at break even. That's my break even, because remember, we take the credit and minus those short puts. That creates the break even. And if it goes below 175, then I've just washed my hands with this, take my loss and walk away. But if it settles at in the next 36 days, if it actually comes down there in that range, then I would be happy to buy it in and around 180 for that matter. I still get to keep the credit, so my break even would still be 178.40. All of that said, I usually don't put these trades on ahead of my webinars, but you guys know by watching these that I've been waiting for a pullback here in Microsoft and, you know, a little bit of a recovery, which is what I'm getting right now. So it's the perfect scenario for me to put this trade on, and I'm not going to wait for the webinar. I'll actually talk about this in that webinar though. So I just wanted to clear all of that up. And something to know, you know, everybody wants to talk about Tesla, and Tesla has had this basically massive short squeeze going on this rally, people jumping on board with that. Something interesting to note, you can see earlier this morning, we opened up way in negative territory, but now are positive by $20. Well, what happened? Basically, Tesla is going to release $200 billion worth of stock, basically raising capital by selling some stock. And the market seems to like that, moving higher. You know, you would think that you add more supply, that could drive down the price. And that was the thought process coming into today when people were hearing about that, they were selling it off. But now it's getting gobbled up right away. Those haven't been released yet. They've just announced that they are going to release that, and market moving higher ahead of that. So I needed to talk about that because it is a big headline story right now. So like I mentioned, I am doing the short put spread for today's webinar, and this is implementing options into our portfolio. It's in and around stocks where we want to build it out, you know. So like I said, I'd like to have Microsoft for the long term if it starts breaking down to my price, and if it moves up and away, then I got paid for playing, right? So that's what I'm going to be doing and talking about today in the webinar. So go to protraderstrategies.com and sign up for that. Otherwise, if you can't take that, take it easy.